Thank you, everyone. And how good is it to do this face to face again? I think last time I was standing up here was about 2 years ago. And I guess the message then was we've worked over 6, 7 years to restructure the business, to come up with a business which the balance sheet looks better, and a business which we were looking at how do we grow and how do we extend and actually start to look at M&A, and we've participated in a few processes. Now, 2 years later, I can stand here and we now got the Cracow gold mine in Queensland, which we bought in July last year from Evolution, and we still have the Tritton copper mine, which has always been in the business. For Cracow, we forecasted last year to do 70 to 75,000 ounces at around 15.50 an ounce, and Tritton about 22.5 at about $3.75 a pound. Both of those mines have performed really well in the last financial year and will come out with the results in the next few weeks. We then also got the Cambalego joint venture with Helix Resources, and you might have seen some of the good results they had on that in the last few weeks or months, and that looks very exciting, and that deposit is about 40 kilometers from the Tritton plant. And then we still got the Torrens joint venture. So the real transformation started when we bought Cracow in July, and you can see the share price there. We raised money at 3 cents when we bought Cracow last year in July, and today we're sitting around 19, 20 cents. There was a few things which triggered that. Obviously, the Cracow acquisition immediately generated cash, and that came into the business. We all know that we've seen a real uplift in copper price, and that helped the Tritton operation. And then we found a new deposit at Tritton, which is really exciting, and we'll talk a bit more about that in the presentation. But that has just shown us, through M&A, bringing more assets in, really working the assets hard, and looking at how do we grow the business further, has been very exciting. So today you can see there, in the last 12 months, last year, June, the market cap was $19 million. Today it's $419 million, and it's really on the back of the price, but also the Cracow operation. You can see their cash from operating activities from 6 in December half 2019 to the last one to $72 million. So it was really a big transformational process, and we've seen the benefits, and the debt which we had in the business at the beginning of the year was $74 million, and it's now down to a positive number, but it's down to 27, and we paid $47 million down on the cash, on the debt in the last 12 months. So looking at Tritton, that's the copper mine in New South Wales, doing about 22,000 tons of copper. And you can see there on the bottom right, the history has always been doing about 22 to 27,000 tons of copper, very consistent. We're mining currently out of 2 underground mines, the Tritton underground mine doing about 1.1 million tons, and then Murrawombie doing about 500,000 to 600,000 tons. We also have 2,160 square kilometers of ground, so a very extensive exploration package, and we've seen some really great results in the last 12 months from those exploration results. The real opportunity for the business is at Tritton right now. In the last 7 years, while we had a lot of debt and a balance sheet which wasn't very healthy, we never really invested in new projects at Tritton. It was always Tritton and Murrawombie was the 2 main mines. The opportunity here is we are generating good cash. We raised $50 million a few weeks ago, very well supported, and the company is funded to bring better quality tons into the Tritton plant. So you're looking at it, Tritton underground mine is getting deep. It's about 1,000 meters deep. The grade is over the years slowly dropping off a little, but now you've got Budgerigar, which is 600 meters to the north of Tritton, better grade, lower cost, high up in the system. You've got Avoca tank, which is a reserve of 800,000 tons at 2.6% copper, where we're currently averaging about 1.6 through the plant, and 0.9 gram a ton gold. So you can see that bringing these projects online as quickly as you can will improve the throughput and the cost profile for Tritton specific. So you look at those development-ready projects, Budgerigar, Avoca tank, and the open pit will all be done and started in this financial year we're in now. And then from an exploration point of view, with the funding we raised a couple of weeks ago, we're going to put $15 million into exploration, specifically at Triton, and it's to accelerate all those projects, Constellation, Budgery, Kurrajong, get them all into a reserve position or a resource position. We can get a mine plan around it, and you can see bringing those projects online will immediately extend the mine life, but also what it does, it brings better quality tons in grade and costs into the production profile. So we're working on a life of mine plan, and we've been working on it for quite a while. We'll bring that out in the next few weeks for people to try to get the concept of how we see the future of Triton, which is significantly different to what it was 2 years ago. Then you look at the exploration. As I said earlier, we'll put $15 million into exploration. It is in an area where there's a whole heap of exploration activity. We've got Helix, we've got Peel, we've got Aurelia, and everyone in the region who has spent money on exploration has actually found something. And we are planning, if you look at that slide, the exploration tenement hasn't really been explored to the northern side of that road. Where we found Constellation was the whole EM survey we did over the last 18 months. We identified the target, and we've hit a very exciting deposit. But the top end, which is that pinkish color, that's a whole area which we picked up, a new exploration tenement, hasn't been explored at all. We will do this year airborne EM over it and start to do greenfields exploration further north on that tenement package. We've also started an auger process to look at a geochem around the site to see what signatures we can see. So the message is, yes, we found Constellation, it's super exciting, but the greenfields exploration will continue, and we'll keep looking for repeats of Constellation or those sort of ore bodies. A little about Constellation. This is a very busy slide, but I guess the takeaway here is the first hole we drilled intersected copper at really good grades. The second hole intersected 3.5 meters at 20% copper, very high up in the system. Since then, we did 24 diamond holes. We've now traced this ore body down 850 meters down plunge has been drilled. It starts at 8 meters below surface, and we've actually got some EM plates which shows there's already another 300 meters, so it's potentially already 1,150 meters down plunge traced. The exciting bit though is, if you look at this slide, the last bunch of results we put out, you can see there, we're doing an RC drill program on the shallow part of the ore body, and it's really just trying to say, well, let's do this fast. It will be an open pit, fairly high grade, low strip ratio. Let's get that into a resource as quickly as we can so we can accelerate how quickly we can bring that into production. But you can look at those results, 13 meters at 8.6% from 52 meters below surface. And as we've drilled this, it had actually extended, but it also has got thicker than what we originally thought. The first hole was 3.5 meters. Now we're getting 13, and some of the holes was up to 60 meters. So the idea here is we're accelerating this exploration to come up with an open pit design, which will then go underground to mine the rest of the ore body. This is already big enough to be a mine. It's 47 kilometers from our process plant. We're already hauling in the same direction from Marawambi, 27 kilometers, so it's only another 20 kilometers. And there's capacity for us. The plant can do 1.8 million tons per annum, and so it's really, really exciting from where we can see the future for Triton. On the Krakow side, we bought this asset from Evolution for $60 million cash up front. You can see again the bottom right, it always delivered about 80 to 90,000 ounces. This year we forecast, or last year we forecasted 70 to 75. When we bought the mine, we thought it will be 57 to 62 in this financial year. We'll bring in an updated forecast, which will potentially be better than that in the next few weeks. But this was the perfect acquisition at the right time, right size for us. It's in Queensland. It's a 5-hour drive from the Brisbane office. And the team there has done an amazing job to settle into the Aeris way of running the business and looking at how do they improve the mining and the costs at the mine. That slide, I think, tells a lot. If you look at the history of this mine, it never had more than 3 to 5 years of reserves in production. Over the last 2 years, it dropped off. but we put that down to they haven't spent much money, and in Evolution hands, they always chase bigger ore bodies like 100,000 ounces is what they were looking for. In our hands, we're looking at if we find 10, 20, 30, 40,000 ounces, we'll take it because each one of those will extend the mine life. We've allocated $13 million for this financial year, which was also part of the equity raise. And really the focus is the near mine. So there's an underground mine. We're putting an extra drill rig in. So we got 3 drill rigs running now underground to look at all the different areas underground, and everywhere we drilled so far, you'll see on the next slide, we've actually increased the resource already. What the guys have done at the mine is specifically focus on, historically the plant did about 550 to 570,000 tonnes. We're now pushing 650,000 tonnes because there's 900,000 tonnes of stockpiles at around sort of a gram a tonne, which we will put through the process plant to keep that full. And then of course the focus is the new space, we call it, it's basically greenfields, it's outside the mining areas. And you can see there some of the resource updates we've done already, and Rose's Pride was up 260% and Klondike 324%. And we're aiming to have an updated ore reserve in next month to bring that out. That's an example of the underground mine. You can see there all the areas in red is the current areas we're drilling. Each one of those has resulted or will result in a resource update or increase, and all the black areas still to be drilled. And the additional drill rig, now we've got 3 drill rigs, will target those black areas this financial year. In the greenfield side, you can see the near mine is where you can see all the structures, but we got Krakow Southwest, which is potentially, you can see the southwest structure, but from the western field, there was 2 million ounces out of the current western field. Looks pretty exciting. The guys are doing a lot of work to see what we can find around the southwestern field. Then we've got Ballymore and Boyard. Boyard, for example, is a large system, 3 kilometers by 1.5. Hasn't really been tested. So this financial year, we've allocated some of the money, about $4 million, to start to work on these greenfield opportunities while we're still looking at increasing the resource and reserve from the underground mines. On the M&A space, we've looked at it. We've seen the value which bringing another operating asset into production or into the fold in the last 12 months. We're actively looking on how do we grow the business further. We've got exciting opportunities at the 2 mines, but we believe that's what we've got to do anyway. That's our job. That's why we're there, is increasing those mine lives. So we're actively looking for copper gold opportunities. We are operators, so our preference is to find an operating mine. Currently looking in Australia as first priority because COVID makes it difficult to do offshore due diligence, but that's not saying we wouldn't look. So we have been in a few processes in the last 12 months, but the exciting opportunity now is the next asset's got to be better than what we've got, so we need to upgrade every time we do something, which is really exciting. I guess in summary, Krakow is a great acquisition. The forecast will be achieved. We've seen a lot of reserve and resource upgrades, and we'll see a lot of extensions in mine life for Krakow. Tritton is, I think, where the real great opportunity lies with the current copper price. The margins are big. They generate good cash. A year of investment is coming up in this financial year, but it's all about extending that life with better quality tons coming in. From a corporate point of view, as I said earlier, a lot of debt has been repaid. Our net debt position as of June 22 was 47 million net debt positive, and significant cash in the bank after the placement, and also the cash which we generated in the financial year. I guess what makes Aeris different, we are a team which has been together for a very long time. We used to run Northern Goldfields together as a team. We're still together, and we are focused on where we're going. We've got a strong cash flow position. We've got a strong balance sheet now. We've got a great support from shareholders, which we've seen in the last equity raise. And we're open about we want to grow this business to something special. And we think we got, and we know we got the support from both management board and shareholders to actually go and do something exciting. Thank you very much.